by step, we won't stop. Feel the beat, make it pop. Taking tunes, so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes, so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Come on. Come on. Come on, shout it out now. This is Sugar Skull Show. We got lots of music, technology, and more. Come on! Come on! Sugar Skull Show, here we go. Music, tech, and much to flow. Come on, dance, let it show. Energy high, feel the glow. Lights flash, beat gotta catch. Groove to the sound, make it last. Tech magic all around. Feel the vibe, feel the sound. Join the ride, music loud. Tech and tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Gadgets, lights so bright. Rhythm takes us through the night. Feel the pulse of the scene. Sugar skulls, living a dream. Come on! Step by step, we won't stop. Feel the beat, make it pop. Taking tunes, so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes, so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes, so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Come on! Come Show. We got lots of music, technology, and more. Come on! Come on! Shuka's Skull Show, here we go. Music, tech, and much to flow. Come on, dance, let it show. Energy high, feel the glow. Lights flash, beat gotta catch. Groove to the sound, make it last. Tech magic all around. Feel the vibe, feel the sound. Join the ride, music loud. Tech and tunes, we so proud. Sugar Skulls in the crowd. Come on, shout it out now. Gadgets, lights so bright. Rhythm takes us through the night. Feel the pulse of the scene. Sugar Skulls, living a dream. Come on! Step by step, we won't stop. Feel the beat, make it pop. Take it to so alive. Sugar Skulls, keep the drive. Join the ride, music loud. Tech and tunes, we so proud. Sugar Skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Tech and tunes, we so proud. Sugar Skulls in the crowd. Come on, shout it out now.
Check 1, 2. We are back. Back again. Shorty's back. Bring a friend. Guess who's back? Guess who's back? Guess who's back? What up? Happy Monday. Kind of sucks. Monday kind of sucks, but whatever. It's a Monday, right? It's they're supposed to suck. So stream is late today because one of the things he does. Ticker tape. Oh. Detach this layout from in a separate window. Okay. Let's put that right there. I want it to go right there, but whatever. Where's my ticker tape? There it is, stock ticker. Where you at? There it is. Right. How's everybody doing today? I'm gonna see. I'm gonna look at this thing. Python open with. Where's my Visual Studio Code? Yeah, always sure. Always. All right, let's take a look over here in a book with a reading rainbow. I don't want to go too big because then it'll. Okay, so display interval 300, scroll speed 2, frame delay. Tickers. So if I wanted to add a ticker, all I have to do, let's see, what do we want? Now what's down here? That's why I was afraid of getting stuck. Windows. There we go. Let's see, configuration, tickers. Mm-hmm. Restart it. Nope, that didn't work. I broke it. I broke my ticker. Oh, I gotta do. There we go. Put in some eBay here. Okay, there must be something else that it needs to be loaded then. All right. Whatever. Is what it is. Is what it is. Let's see. Close this out. Let's see what we got. Anything going on social screen? Social stream. Let's see how many points I got. Points. That is not working. What? Only 270 points. I need 10,000 points to spin the wheel. Can I spin? Nope. Okay. I can't even spin my own wheel, lady. All right. Bitcoin. eBay is at $100 a share. IBM. I'll just grab this. Pop it out like this. Pop. Bring it up here. Right under there. And go like that. Because I can't make this any bigger. Can I? No. Quotes. Let's see what we else we got. Personal. We got public. 24-hour trading. Interest rates. 4.9. Ooh, come on in. There you go. No, in. Maybe not that far, but whatever. You can follow them on TikTok. Follow them on TikTok.
Best of all, you can ask questions by chatting directly with an education
Ask
coach.
questions in the
It's
live
interactive
chat.
learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Top 10 gains. I always think this
Sometimes,
person's
you
a
know,
trans person.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. GE Aerospace set to release its quarterly results tomorrow ahead of the open. Analysts are projecting it will report earnings of $1.60 per share on an adjusted basis. Revenue is expected to top $10.6 billion. The stock is up 70% year over year, but shaved off about 1% so far this year. Now, on the analyst front, Bernstein Stockton is reiterating an outperform rating today with a $405 price target on shares. So it sees more upside from here. All right, time now for the tug of war on GE Aerospace. For that, let's welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, got to get your thoughts on GE Aerospace. Kevin, I'll start with you. Your take. Kevin, not sure if
Bright
you could
and
hear
shiny.
me. Okay, Tom, we'll go to you first, Tom, because I think we're having issues with Kevin's audio right now. So I'm curious to know your thoughts on GE Aerospace, especially, listen, on a year-over-year basis, strong outperformer. Year-to-date, little shaving
grief,
here.
where'd it
What's
go?
your thoughts?
Well, think about this, Diane. From about 5 years ago, this stock was trading near $30 a share. Remember, they did the spin-off of GE Healthcare in January 2023, GE Verona in April of 2024. And since that time, GE Aerospace, this stock has just blown up to the upside. We're up about 900% from levels that we saw 5 years ago. So it's had a spectacular run. Their backlog continues to basically prove they've got 3 to 4 years worth of backlog.
39 was
But
38
we always talk about
a
the
few days ago.
demand for their jet engines on the commercial side especially. But the key to their growth has been the servicing of these planes. These engines last, 20 years or so. So they have, every time they're releasing a new jet engine on a new plane, whether it's Airbus, whether it's Boeing, they have these service agreements in place. Just last quarter, the company's services revenue jumped 31% year over year in that final quarter of 2025. So that's where a lot of their growth is taking place. And then you look at the backlog that Boeing and Airbus have. So they've got a good mix here for GE as far as these engines, and they make one of the better engines as far as fuel economy goes. So both Airbus and Boeing want these on their planes. So that's what you have to start taking a look at. But the stock has, as we mentioned, stock's up, 67% over the last 12 months. It's had a great run. We pulled back about 13% from the all-time highs that we saw in February. So, the bar is still high in this one. But continually over the last maybe 2 years, on a quarter-by-quarter basis, they continue to show that growth rate. That's got to be sustained, though, because the bar is high.
Okay, the bar is high here. Kevin, I think we got things fixed up with your audio. What's your take?
So this part of GE that is, one of the three companies broken up. This is GE, Aerospace, and so they do. Not only do they make jet engines for the commercial, not only do they make jet engines for the military, but they service them and sell parts. And we know that this part of the U.S. economy is surging right now, and GE jet engines has always been a leader in terms of jet engines. And so looking at this, how we're going forward, all the things that they do, I just don't see a way that this company is not surging forward and doing well. Valuations, that's a little trickier, but in terms of their growth and their the health of their business, I expect really good things out of any call from GE. This was always, even when GE was a massive company, this was always the most solid part of their business, Diane.
All right, let's get into the example trades. Kevin, we'll start with yours. What's your approach today?
So mine takes a modestly bullish look at GE from an earnings perspective. The expected move right now is about $14. So I looked at something, the stock was trading slightly higher than this, but I looked at the 320 call calendar. And why? Well, look at the volatility in the front, about 66 in the April 24th expiration. May 1st, only about a 49. So that makes for an relatively inexpensive call calendar because you're buying the lower implied volatility, selling the higher implied volatility. The 320 one-week calendar spread trading about $1.25. It's trading a little higher now as the stock has recovered, but it's trading closer to $1.50 now. But anything around this level, if you get a move towards 320, this can really expand and be a multiple winner like this. You're collecting theta, you're long about 5.5 deltas, Tom, and this is, like I said, you still need the right directional move. It's a bullish spread, but this is a forgiving spread that gives you a big area where you can be profitable, Tom.
Yep. Let's break this one down. Really short-term positioning on Kevin's example trade to the upside, to the bullish side. buying the May 1st weekly 320 call out of the money to the upside by about 17 bucks. Selling that same 320 call in the April 24th weekly options, paying roughly, we've got a $1.25 debit, as Kevin mentioned. It's a little bit higher than that, but the debit you pay is going to be a risk. So pay $1.25, 125 bucks in risk for exposure to the upside. The risk reward profile here looks pretty good, but remember, you're shooting for the 320 strike, right? About that one standard deviation move that the option market's pricing in, which is about plus or minus $14.50 move. So the 320 strike kind of sets up nearly with that. But you've still got a range below, maybe just below 310 on the downside, maybe just above 330 on the upside to be potentially profitable on this trade. And Kevin mentioned it, the vol dispersion that you have in these types of strategies where, hey, you've got that event risk coming up with earnings. That means implied volatility in the option that you're selling, in this case, the April 24th 320 call, is a lot higher than what you're buying out in the May 1st weekly options on an aggregate basis, that 320 strike call. So really short-term positioning, but inexpensive way to give yourself upside exposure in GE post earnings. Now, what don't you want to happen? Well, you don't want the stock to sit here or go lower, or you don't want to see a 2 or 3 standard deviation move to the upside because you start losing profitability above 330 on this type of position. So, yeah, it takes advantage of a move to the upside for an inexpensive risk level on this type of position on the bullish call calendar here. So, Kevin, I went a little bit different because the price to sales ratio on this company is 7 times right now.
Have
Historically,
returned.
even though they've had a couple good earnings event, stock fell last earnings nearly 6%, even after a pretty good report.
How dare
I looked
you.
at the flip side here, a bearish trade, and I looked at really short-term positioning out in the April 24th weekly or the May 1st weekly
It's
options here,
The Bears.
where I'm going to buy an unbalanced put butterfly here. Buying one of the 305 strike puts, that's slightly in the money by a couple bucks. Selling 2 of the 290 puts, that's where you want it to go, and then buying 1 of the 285 strike puts. So bearish look here on this unbalanced put butterfly. You're paying roughly about a $5 debit, probably trading $5.40 right now. But the debit you pay is going to be your risk on this particular trade. So 500
Down
bucks
10
per
points.
spread. On this one, it takes your break even around 300 if you pay a $5 debit. Kevin, it gives you that exposure. You
So I
can
was at
double
280
your risk
minus
if its
10,
stock goes at or near that
270.
290 strike, but even below 285, it's a double in profitability.
Yeah, this works.
Here's what our viewers should learn from these 2 trade examples. Look at the $15 move that my upside calendar is looking for. Look at the $15 move that the downside put butterfly is looking for. Taking that right column,
Sure, answer me back.
taking the expected one-day move, using that for strike selection. I think that's the key takeaway here. If you're bullish or bearish, use the math that the Thinkorswim platform gets you for strike selection. $15 on the upside, $15 on the downside, Tom.
Yeah, and this unbalanced put butterfly with this one, stock trading currently about 303. So you only need about a $3 move to the downside to get above that break even, well within the 1 standard deviation move that the option market's priced in.
Still
But
running
as
the
Kevin
same
mentioned,
one.
I set up that short strike where you're selling 2 options
So
on this example trade
I say
at or near where
mute you for a second there, buddy. We're still running the same. I'll reset it. We'll do a new one here. We will do. I'll go with Twitch. Let's go restart giveaway. And then we're going to set it for t-shirt. And we will go set the command. Command is set. Twitch, t-shirt. 0 entries. I will check up on this every hour. So it's at 3. It's 12:30 right now. I'll check back at 1:30. I'll leave 1 hour in here for entries. If you do not enter, you do not win. So Remember, exclamation point T-shirt to enter the contest. All right, let's get back to trading, man. Let's see what we got going on here. Funny. All right, let's see.
Email.
I haven't been able to listen to anything today. It's been a Monday. Network team did some work over the weekend, and when I went in today, it was not working. So that was like 6 to about 9-ish that wasn't working. So nice. It was very not nice. It was very had to wait for a network assistance to even get emails. Of course, I forgot my phone too, but whatever. Let me know in the chat how everybody's Monday went, even though I'm pretty much sure I'm the only one here. In another line. In another line. All right, we're back. Let's see what they got to say.
Alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Likefolio, taking a look at Tesla today. All right, Andy, good to see you. Good to kick off the week with you. Last week, Tesla revved its engine, had it had a comeback last week. Still down on a year-to-date basis, but what does sentiment look like for Tesla now?
Looks pretty good. We really see Tesla as one of the most cult-like brands in the world, kind of like Apple was or is. And these customers are extremely loyal. It's a growing base of very loyal customers, and the technology is proving out to be extremely valuable to those customers. So, as we look at deliveries,
anybody own a Tesla?
Over 500,000.
Anybody want a Tesla?
Q1. We look at our data from a web traffic perspective, that's down 15% year over year. And part of that is the shift from purchasing on the website to purchasing and browsing both in the bevy of new locations that they have, as well as on the Tesla app. And so we don't worry too much when we see this, especially when you compare versus peers. Tesla looks pretty good versus other automakers. We just really try to focus on the technology story behind the company, because we think, once again, this is significantly more than a company that sells cars and gets their profit when the purchase is made. My dad just bought a Tesla a couple of weeks ago. He's now fully bought into FSD and is paying $99 a month very happily for the rest of that car's life. He will be doing so.
That reminds me, I got to set up my
new wave of Tesla revenue and profit margins. So it's not about margins coming off the line. I think it's the margins on the software, which are extremely high and becoming more and more a staple for Tesla drivers and owners.
Andy, when you look at this company, we always talk about Tesla. It's a bifurcated stock, from traders and investors at this point, due to the fact that, hey, they've seen a decrease in EV sales. It's still, the majority of what they create as far as revenue goes. But this stock is built in with the expectations that the robotaxi is going to do really well, that the humanoid robots are going to sell 1 million of those a year. And the fact that you got the
humanoid
SpaceX IPO
robots
coming out, the tie-in with XAI at this point. So a lot of that's built in. Do you guys have the data that kind of supports it where, hey, you know what? You might not believe in the valuation of Tesla, but what they've got coming down the pipeline is a reason that the stock is priced where it is.
Yeah, I mean, that's the story that we've been telling since 2018 when we first got into the stock in the low teens in terms of share price. This is about the future. This is a binary bet. It continues to be a highly volatile binary bet. But I'll tell you, one of the craziest stats I saw last week. In March in China, the Model Y was the best-selling car in China, not just EVs, but the best-selling car in China, even though it cost 3 to 4 times what other Chinese manufactured EVs were charging. And also, the biggest, one of the kind of stories that I think we've glossed over is that the EV credits went away. The $7,500 EV credit went away, and Tesla's market share in the EV space went up from around 46% to 54% on that move. So what that tells us is that the value of a Tesla vehicle is being seen by the customer, the value of this car that improves the experience month after month, update after update, is coming through for the customer. So it's not about price. They have, the price went up on a after-tax basis, but market share climbed as well. So they're in a good spot. I don't think that you have to buy into the humanoid robots yet in order to justify Tesla at current prices.
And then to be fair with Tesla, that even that EV credit capped out at a certain level. So if there are buyers, we often talk about the K-shaped economy at the upper end of the K-shape, they are phased out anyway and couldn't take advantage of that credit anyway. Let me ask you this. We got earnings coming up. The street's expecting 36 cents per share. That's higher than it would have been a year ago. Revenue is expected to come in almost at $22 billion. Talk us through your earnings score on this one, Andy.
Yeah, just slightly positive now. I think that the recent rally in the shares has taken some of the excitement we had about the Tesla earnings report out. I think a lot of the bullishness is kind of priced in at this point. So I'd be careful going into Tesla earnings. I think this is a long-term story for people who believe in Elon Musk as an entrepreneur, as a leader, and in the vision of Tesla as a company.
Long-term
story.
They
don't always hit their timelines, but they do tend to
it's a long story.
At some point, and it's a big vision, one of the biggest visions in the world. So if you're a long-term investor, I look at earnings as an opportunity to potentially pick up shares on dips. And if you're a trader, this might be one I just kind of back off from this quarter. I think there's a lot at play, and the recent run in the stock just makes it a tough play from here.
Deliver what they promised, no pun intended there. Thank you, Andy. That is Andy Swan, co-founder of Likefolio, with the latest sentiment data on Tesla. Now, for the trading perspective on all things Tesla, let's bring Kevin back into the fold. And Tom, your final thoughts before we get to the example trade.
Yeah, a little bifurcation between maybe some of their data and the stock price. So I get kind of where Andy was talking about that. But at the same time, what Andy just mentioned there at the end, the timeline is always going to be an issue for Tesla. They're an innovator. It's been hard to kind of bet against Elon Musk, but the stock is pretty volatile on earnings sometimes and not earnings sometimes. So it does have that ability to move. And I think one of the key takeaways when you look at the stock going into earnings,
All right, I'm going to have to take a break. I will be right back, though. Back to some finance. And sharing is caring.
Revenue keeps growing and backlog keeps growing, and that's why the stock keeps moving higher.
And let me ask you this, because, you know, you make the comparison. So Northrop Grumman on a year-to-date basis is outperforming RTX. On a year-over-year basis, RTX is still the outperformer. So is there a higher test in front of it, especially when you think of it on a competitive landscape basis?
Yeah, so if you look at Northrop or even General Dynamics, those are primary defense businesses. If you look at the breakdown of RTX, $161 billion of the backlog is commercial, and $107 billion is defense. So the primary business is still commercial. And I think that's, again, why you're seeing some underperformance of RTX relative to more traditional defense contractors like Northrop or even General Dynamics.
All right, thank you, George. That's George Silas, our senior markets correspondent, with the breakdown of RTX. So let's get Tom and Kevin back in here for example trade purposes. Now, Tom, this time you've got the example trade in RTX. What's the approach that you're going to take in front of earnings?
Well, yeah, you look at it, the stock's pulled back about 9% from those all-time highs that we saw just a bit ago. But 2.5 years ago, the stock was trading under $69 a share. That's 185% worth of gains in the last basically 2.5 years. So the bar is still high on this stock, and valuations have grown. Now, the commercial side of their business is doing well. You know, the defense segment, Raytheon's doing well at this point, and their backlog is continuing to grow. But I looked at a strategy that takes advantage of maybe a little bit of a pullback just because the bar is pretty high, but this is about the strategy. This example is bearish, but if you're more bullish, you can do the same type of strategy, but just flip it to the call side. But I looked at a put diagonal to the downside, really short-term positioning, buying the May 1st weekly options that expire in 11 days, the 195 strike put, that's basically at the money. And then the option market's pricing in about a $9.50 move either way in the stock on a one-day move. So I went $10 out of the money to the downside and sold the April 24th weekly options, the 185 strike put. So bearish $10 wide put diagonal, paying roughly about a 380 debit, might be about a dime or 15 cents higher than that right now. The stock has pulled back just a little bit, but the debit you pay is going to be a risk. So a $10 wide bearish put diagonal, and you're paying less than half the width of it. You're paying less than $4 for this. The risk is the debit you pay on it, so about $380 per spread. Anything below about 193 is going to be profitability on this one. But Kevin, this strategy, while it's directionally bearish, it kind of highlights how those implied volatility levels and that dispersion between them can really create opportunities, whether it's bearish or bullish, just based on the pricing that the options have in and the event risk, right?
Yeah, $9.50 expected move. Let's round that to 10. $10 wide is the width of your strikes. Buying a 45 vol, roughly selling a 64 vol, that lessens the price, the overall price you're going to pay. But, Tom, like you mentioned, you need the move on the downside. This is a pretty heavily directional play, so it's a bearish play on RTX, Tom. Looking for a move towards that 185 strike.
As I mentioned, you know, this is a bearish put diagonal here because you're expecting the stock to go below that 193 or so break even on this. If you did the same option series and you bought the May 1st weekly 195 call, sold the 205 call on the April 24th, you're paying about $4.60 debit for that bullish one. If you wanted to flip this, if you're more bullish on this post results on this one, but this one takes advantage of a move to the downside. You need the move below 193, that vol dispersion we talked about. You got some assignment risk on that short option over the next 4 days until expiration on that. But yeah, here you go, Diane. Paying a lot less than half the width of this bearish directional put diagonal.
Okay, and as a reminder to traders and investors, the estimate that we're expecting for adjusted EPS $1.52, which would be a little higher from a year ago. Revenue is expected to top $21.5 billion for RTX. Good stuff, guys, on the example trade there. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It is available in the App Store. And tune in 24/7 on schwabnetwork.com. Stay with us. You've got Next Gen Investing with Jenny Horn and Alex Coffey coming up.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And as we do check in on markets now, about 3.5 hours into the trading day, we are seeing some persistent weakness, at least in 3 of our 4 major averages. I will say that we are actually holding on relatively well here in the Russell 2000, which has been higher for now still, at least several hours. So, Alex, as we assess, of course, the volatility to kick off this week, we saw another record-setting week last week to end on a very bright spot, but it does seem like with some of the uncertainty we got over the weekend, it seemed like we got good news, then we saw that uncertainty really come back into play here markets are assessing, I'd say, the degree of risk with this being prolonged, but also not really, rewriting substantially to the downside.
Well, considering the low last night for the S&P futures was 50 points lower, I don't see the weakness down 25. And, Jenny, I think you laid it out. And I think a lot of our coverage has centered around, hey, if there's a setback geopolitically, that's net negative, right? And I don't think there's a lot of pushback there. But if that's the sole lens we're interpreting markets from, you're probably a little bit confused today, right? You'd expect a little bit bigger move. I mean, this would have been an all-time high with the exception of just on Friday. So we're still 100 points higher than the previous all-time high from before the conflict. So to me, I think we got to start asking the question is this market no longer being driven by macro? And of course, I've been asking that question for 3 weeks. So I'm not surprised that we're basically rallying back. And at one point today, we were basically unchanged. You had the Dow higher earlier. You have the Russell higher now. Look, I'm not going to say that the conflict doesn't have an impact, but it's not driving the ship anymore.
It sure isn't. And I think that that's a great point. And frankly, price speaks for itself here. Is I think that many were assessing markets and the futures activity overnight, thinking that we'd open a lot lower. I mean, VIX holding below 20 to me is all the evidence you need.
And let's ask the question of how can that make sense, right? Like crude oil is still expensive. I thought that crude oil was really having an influence on financial markets. And the answer is because it affects the U.S. less than it affects the other places. And so if you're forced to be invested, which a lot of institutional money is, are you really putting your money in Europe if you're uncertain about the geopolitical landscape? I don't know. Maybe somebody is, but I don't know that seems like a safer trade if you're worried about the energy situation. And as a net exporter, really the U.S. and Russia are like the two primary places that are insulated from the conflict. Well, you can't really invest in Russia because it's restricted through the various sanctions. So it kind of leaves you with the one big choice, which is the U.S. trade from trying to find okay, if things go bad, long-only position. Okay, well, then you start thinking about, well, what's the good news? Well, the good news is energy goes back down. We refocus on the AI innovation and earnings growth. Well, where's that happening? It's happening in the U.S. too. So it's sort of tails you win, heads I wins, you know what I mean, situation. And that doesn't mean there's not risk. There, of course, is risk. The market's down today. But it's hard to envision a situation right now where other nations, particularly in Europe and in Asia, outperform relatively in either scenario.
That's true, because I do think that the long-term implications are still being read through by the markets, and I think that we're not really even sure what this could mean for U.S.-based companies. But what we do know is I'm sure we'll see some impact. Whether we're kicking the can down the road is, I think, the next question. But it will definitely set us up for some interesting guidance, I think, as far as this earnings cycle is concerned, because really we are now in a full swing of earnings season with lots of big names coming this week and lots of big names coming even the next week. So we have at least a lot of stock-specific news to maybe override some of the macro concerns, which we'll still be, of course, very closely monitoring. But as always, throughout the next hour, we'll focus on several of these stock movers to keep on your Monday radar. We will also be assessing some key technical levels in both IBM and Arista networks with a more positive note from Evercore ISI today. And of course, IBM reporting its first quarter earnings this Wednesday. For FOMO today, Marvell hit a fresh all-time high on reports of talks with Alphabet to make these custom AI silicons. So we'll also be discussing then what really Gen Z workers are asking for in the workforce and why benefits and clarity may matter more than even just pay. And for under 30 today, USA Rare Earth shares are taking off following a major acquisition in Brazil. So a lot of companies with specific news today, a lot of, I'd say, sort of analysts also re-ratings as we again assess this earnings cycle and some of the risk, frankly, still being seen in this market.
Yeah, let's get some of these movers. Okta got an upgrade today. I believe it was Barclays, if I recall. And seeing opportunity in this sort of identity spend as a subset of security spend, which I thought we were getting rid of cybersecurity. I thought AI was taking over everything.
Hey, not based on last week, because last week a lot of these names actually made kind of big moves on a week-to-date basis. Okta was one that climbed almost 15% on last week alone. Today with another 4.9% move to the upside here. So Barclays With this upgrade to overweight from equal weight, price target was raised to $90 a share from $85. So yes, would imply some modest upside from where we're currently trading just below $76 a share. But their overall CIO officer survey does indicate that identity has moved to the top spending priority amongst these cybersecurity players. They do believe that their standing is improving steadily as a vendor is expected to see this increased spending. So this does, in their opinion, also reflect some of the broad exposure to, as Alex mentioned, this larger identity market, including some of the fast-growing sub-segments in their opinion, of course. And so this name, I will say that I was assessing some of the cybersecurity stocks relative to like the concerns of overvaluation or being pretty frothy at these levels. I will say Okta doesn't trade at a huge premium on a forward basis, but also you can make the argument we don't really see that same implication of growth either. And so we've pulled back now about 12.5% on the year. We do remain off of recent highs, though, by about 40.5%.
Yeah, this stock got cut in half, but it's quietly about 20% off its lows already. It's having a nice day today. So perhaps trying to stage what I framed this morning with Diane as sort of a long road to recovery, because you're kind of only good as your last trade. And in the sense of this stock at 75, it's a long ways from its highs up in the, the 120s just in the last year, let alone kind of all time. But let's talk SanDisk, because this is the stock these days when it comes to performance. And it's getting some love not only from analysts, not only from, investors, but the NASDAQ's taking note as well.
Yeah, and I mean, initially we were actually, so this just goes to show the resiliency of this stock as of late, because set to join the NASDAQ 100 today. Shares, though, we're seeing sliding at least into the open, which isn't abnormal, of course, with the inclusion of an index to see some degree of volatility, but shaking all of that volatility off here to the downside, at least now up about 0.4%. And SanDisk, again, also has been exposed to some of the broader market concerns, but the stock has surged, just right now, 2,800% and some change over the past year or so. We are up now 290% roughly on the year, and still do remain off of these highs by about 4%. But this just goes to show we've risen 300% from 52-week lows in the stock. We have been volatile, to put it very, very lightly, rising another 45.5% so far in the month of April. And so in addition to this news that I don't think necessarily changes any of the recent bullish enthusiasm behind this name, is, of course, a price target raised to $9.75 from $6.75 at Wells Fargo. So that is a substantial call, and obviously does accommodate the recent run-up we've seen in shares, as we're currently trading at roughly $924 a share right now. So to me, this is them just basically assessing the recent momentum and saying, hey, we were pricing things as if we didn't see this huge run-up in shares.
Yeah, and so a little bit of bearish divergence. You look at RSI. RSI got, way, way up in the stratosphere back in September. It was like in the 95 level. Then when we made the next round of highs in sort of February of this year, it was in like the 90 level. And then this most recent run-up, it's gotten to like 70. Now, all of those are just extraordinary RSI levels, but progressively less momentum behind each move. I don't know. That's picking apart what's just been a monster. And what I should say, too, and maybe we shouldn't be surprised by this, if I went back to the end of last year, and there's all the topics of, what were the big winners in 2025? What does that mean for what will be the big winners in 2026? And one of the things we kept coming back to is the market doesn't really acknowledge a year change, right? Like, the trends and the themes in December of 2025, kind of still exist in January of 2026. Mm-hmm. And the same goes to say for first quarter into second quarter. I'm surprised by the monstrous rally of this year, but am I surprised that SanDisk is the leader again? Mm-hmm. Maybe I shouldn't be, because it was the trend at the end of the year, and we talked about the year end is a fun thing to talk about. It has tax implications, things like that. But from big macro and micro trends, really doesn't matter.
I know. I saw someone once say that it's so funny we assess all of the new themes to be, presented, of course, with a new year, as if the market really knows that we just changed calendar years. It doesn't. And frankly, from day to day, we don't really see any of that. I know the concern with memory specifically is the cyclicality of this business, but we've yet to see that really turn over.
This is a great point. And I think there's obviously the early parts of last year, the theme was tariff, right? Mm-hmm. Enough time has passed that that's not really the theme anymore. But like December of last year, it was like memory stocks were going nuts to the upside. And that certainly began a little bit before that, but that was like the predominant theme. And so I guess we shouldn't be surprised, is what I'm trying to say.
Yeah, and frankly, I guess right now we're almost pricing things in as if we're not, because again, this name continues to see upside even when the overall market doesn't, even when we're set to open lower, and actually finding a new sort of range at these higher levels as we're at least continuing to hang on to a really nice, healthy 250-day moving average and seeing higher highs. So, I mean, technically speaking, this name actually looks also relatively a bit calmer than its momentous move. But again, 45% move this month, not to discredit that. But now to shift gears into a move we're seeing today in AST Space Mobile, which is down about 8%. So pretty substantial move to the downside, as right now this follows some reports of some failures to launch, quite literally. So they did suffer a setback in their plan to put up a satellite for the space-based broadband, and fault lies within Blue Origin, which is, of course, Jeff Bezos' rocket company. But the satellite being carried by a Blue Origin rocket was put into a correct position Sunday and will now have to be taken out of orbit. And so they went on to basically explain the cost is expected to be recovered under the company's insurance policy. But we know that deorbiting a satellite typically means allowing it to burn up in the atmosphere. That's not necessarily what they're seeing right now, but they're saying the altitude is too low to sustain operations with its onboard thruster technology and will be, of course, then deorbited. So it's a blow to both Blue Origin as well as AST Space Mobile as they look to challenge SpaceX, of course, owned by Elon Musk. Blue Origin is right now trying to find viable alternatives to then still see this commercial launch with some of these reusable rockets, while AST Space Mobile's racing to put a satellite of constellation capabilities while providing 5G quality connectivity anywhere in the world before we see Starlink really make that feat. And so this does continue to at least weigh on overall sentiment, but I mean, this is part of a broader target. They right now are targeting roughly 45 satellites in orbit by the end of this year, with 6 currently in orbit. So they need to continue that pace, but obviously one is still being read, at least by the market today, as a setback.
Yeah, this is one of those like classic, I guess, current trend stocks, like next gen social media type darlings. And, you know, I get it. This does seem like a fast growing possibility, but it just seems like we want there to be another successful alternative to SpaceX, another successful alternative to Starlink and some of these things. And maybe these companies will ultimately be that. But you don't really read about this with SpaceX. And it seems like we read about this for a lot of the competitors quite often.
That's true. I mean, maybe it's because, again, we don't have SpaceX as a publicly traded company yet, but it does feel like Starlink is right now where everyone's chasing that like ground to be made up, frankly. And so not necessarily a winner in this space, but seeing a bit of a repricing to the downside as we're down over 7%, almost 8% actually on the session. Now, our last name today here is Alta with a rare upgrade, as Jefferies did actually upgrade shares to buy from hold. Price target was raised to $700 a share from $635. They have this improved confidence, they said, in the company's revenue durability, citing this broadening beauty backdrop and renewed makeup engagement, saying that improved brand newness and merchandise execution does better position Alta to capitalize on this cycle, while spending expectations have been reset for a more realistic framework going forward. And so they did cite this favorable risk and reward at these current share prices, saying the stock now reflects investor skepticism and modest margin expansion. And actually, to Alta's credit, we are up over 2% today. And I know we've pulled back about 6.5% this year, but at least up now about 8% this month.
Yeah, this is another quite interesting space, this cosmetic space, Jenny, because it has the resilience of staple, type names, but it's also quite discretionary. And there's products that Ulta sells, especially the higher end stuff, is not cheap. And so if things are going well, there's still quite a bit of spending that's diverted to places like Ulta and the Sephora's for skincare and cosmetics. But there's also like a bare minimum spend that takes place within this space. And so I'm almost surprised by the volatility and sort of the swings that you see in this name. But for the most part, it does seem like it like catches itself and it works its way back, and it has over the last few years. So it's been a big winner post-COVID. We'll see if it can continue that. Not the best start of the year, especially post the conflict breaking out and some of the general volatility that we've seen over the last 2 months.
Yeah, I think well put. And again, that does tend to surprise with some of the volatility we see on just a daily basis with Ulta, but at least outperforming today. So we will leave it there for the top of our show today. Coming up next, Evercore ISI is getting more constructive on both IBM and Arista Networks. We'll dive into the charts and walk you through some example trades in both of those stocks when NextGen returns.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls,
Your fancy coffee, your giant TV.
it's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to NextGen Investing. It's now time to dive into the charts with, of course, our chart master today, Kevin Green, senior markets correspondent for the network. And so we are diving into IBM and Arista Networks. KG, we'll start things off here with IBM, which also does have earnings this Wednesday after the closing bell. But getting at least some analyst love today at Evercore ISI. Walk us through what jumps out to you from the charts, though.
Well, we are seeing a little bit of weakness to the downside here after that after that analyst adjustment. But if you're kind of looking at the stock, it's trading at the lower end of the range over the last year. It has been, let's say, relatively volatile, but with some key technical setups on the one-year daily chart. This time last year, we did see a positive uptrend. To the upside here, we kind of consolidated around this $295-ish area, then pulled back very sharply. It's actually a cup and handle pattern. It's a really aggressive one, where the consolidation lasted for about a month and a half or so before we started trying to test that neckline. We had a pullback and then once again leverage that 20-day moving average as an area of support, and then started to break out to the upside. Got to around $325, consolidated, and then we broke below the 200-day, the 20-day, as well as the 50-day moving average. And right now, it kind of sets up for maybe close to a double bottom and flagging out here. We did see some buying activity, got above the 20-day moving average, but now the 50 days acting as an area of resistance, along with the volume point of control, which is sitting at around $257 right now. This is where we are seeing the majority of the volume over the last year. So that is acting as an area of resistance. And in fact, if we do close today in this particular fashion, this candle is more of a look above and fail or a reversal pattern that is taking place as well. Now, if you're looking at RSI making lower highs, but MACD is in a bullish formation, still below the zero line, but the 12 EMA is above the 26 EMA, you could get a little bit more confident that maybe the stock could go up to around $275, that 200-period moving average, before rejecting here. But it is having a tough time trying to digest this current level, which is, once again, trading at around that volume point of control.
Okay, and this is one of those rare charts that actually things get, I think, a bit more optimistic the more you zoom out. And so you are assessing a more longer-term time frame. So what do you see there as far as, I mean, like overall trends?
Yeah, I would agree. I mean, we actually have something called a megaphone pattern. This is actually an expansion one. So you are seeing higher highs as well as higher lows, but we are getting to the lower end of the support level, at least for now. And we want to be able to either consolidate or continue to break out higher. The reason why you get a little bit more confident that maybe we could go up and reach some of those levels like $275 is because of that MACD. And MACD is starting to hinge a little bit. We do not have the confirmed cross yet of that 12 EMA above the 26 on the weekly, but it looks like that's the trajectory that it wants to go. And if it is, that is actually going to be bullish for IBM moving forward. But once again, you go back and you look at it and you say higher highs, higher lows. This isn't an uptrend. This isn't a bull trend on the weekly. It just takes a little bit more time for it to develop the positive trend. And right now we're seeing a breakdown. Now, if we close below and get below $225, then you're starting to look at the 200-week moving average, which is sitting at around $196 right now.
Okay, and seeing a bit of a pullback today, not a substantial pullback at that, actually. We're pretty much unchanged here on the session. So appreciate that, Kevin Green. Now, as we do think through trading, IBM here for, again, example purposes, but considering that we do have earnings as a major catalyst coming this week, Alex, walk us through your thinking here.
Yeah, and that was really a big part of the thinking, Jenny, which is there's volatility that's expanded and on an implied basis because of this earnings event. It's allowed some of these options, particularly the shorter dated ones, to hold a little bit of premium into this event. And so what I saw is a stock that's sort of been in a channel over the last really, let's call it 3 months almost, really since the onset post the kind of decline post earnings last time. It's been between about, let's call it 230 and 260. And so I looked at a neutral to bearish strategy as we kind of test that upper end of this sideways channel, and maybe those levels will hold. Gave it a little bit of cushion in the event that it does test the upper bounds of that area. And I looked at the 267.5, 272.5 short call vertical. Now, this goes out to the end of this week, so it is more of an earnings-based trade, collecting $1.25 credit. Looks at a break even of 267 or 268.75. Can make $125, $375 in risk, Jenny, on this one. All in all, though, what it looks for is either an unchanged move or a move inside of that expected move. As of course, if you look at what the market maker move is saying right now, at $16, that would target almost, let's call it 270. That's going to be through the break even. So you're really going to want a negative or an unchanged move, or if it does move higher, inside that expectation.
Okay, and I think a great way to put it, and a great way to frame some of course, the expected volatility of an earnings event. But now to shift gears here into Arista Networks, which has been a bit of a different performer as of late, KG. And so we look at this name, we're actually up 27% this year, another 36% this month. And so a really nice uptrend we've seen that has only accelerated. So walk us through what sticks out to you from a chart perspective.
Yeah, this one's going to be very simple here. We had a positive uptrend this time last year. We did see some resistance at around this $160 to $165-ish area. Saw a pulled back to the 200-day moving average, leveraged that as an area of support. We did break down briefly back in March, but we were able to quickly recover. And now you have this confluence of moving averages. The 20, 50, and 200-day are pretty much around the same level, around this $130, $140 range. And the stock is now breaching above its neckline of $165 and attempting a breakout. So you're basically looking at a consolidation from October to pretty much right now, and potentially going to be able to break out here. MACD is in a bullish formation, 12 EMA above the 26. RSI is in the overbought territory, but once again, it's a breakout, so it actually could sustain this overbought level on the RSI for a considerable amount of time if you are seeing some buyers stepping in. So on the short term or the 1 year time frame, this actually does look bullish. It's still in a primary uptrend right now with a really decent consolidation breakout pattern taking place.
Okay, now how about when you assess a more longer term trend here? Is that still bullish momentum, still necessarily the overall takeaway, or does it change?
No, it's overall bullish. It actually, if we kind of scale that chart up a little bit, the 3 year weekly, obviously higher highs. We did have a breakdown to the downside. Obviously, we had the tariff tantrum, so we did see the stock really get aggressively hit to the downside, but buyers stepped in, just like we saw for the broader market here. Once again, we have this consolidation type of pattern, this kind of cup-ish, if you will. And what I'm usually doing when I have these cup patterns is looking for the high to low range within that particular base. It's sitting at around $50 to $55 or so. And then you just add that to the breakout point, which is around $165. So you can actually make the case that 215 to 220 could be your next major area of resistance if this is going to hold. But on the weekly chart, this looks really bullish. That MACD, the 12 EMA above the 26, still above the 0 line. Those crosses can sustain themselves for about a month and a half or so. RSI still making lower highs, but that also can change here over the coming weeks. So this actually looks a little bit more bullish on the weekly chart. And once again, that 215 could be in the crosshairs over the next couple of months here, just based on the technical formation that we have for Arista.
Okay, and I like that. I mean, just a clean bullish takeaway there for Arista Networks, which is also outperforming today, up 1.5%. So appreciate that, Kevin Green, for all of our technical setup today. Now, as we do think through trading Arista Networks here for example purposes, Alex, leaning into the fact that from at least KG's takeaways and from looking at the chart briefly, it's a pretty bullish trend that remains intact.
Yeah, and the date that I'm seeing for earnings on this one is May 5th, so Cinco de Mayo, but in order to give it some time, we can reassess around there. For our example, I went ahead and looked at a shorter-term trade ahead of that event. What it is a call calendar spread. Selling this Friday is April 24th, 177.5 call, and then looking to buy next Friday is May 1st. 177.5 call, looking for a net debit in the $1.50 debit territory, and if you're able to do that, that'd be $150 in risk. Now, this is basically just structured where if this upside move continues and you get another $10 rally by the end of this week or by the end of next week, a chance for this one to be profitable, Jenny. But most importantly, it is risk defined and it's customizable. So if you have a different target in mind, different time horizon in mind, this could be structured in a different way with the same strategy.
Okay, yeah, and a name that continues to impress here as we are seeing that rally just continue on the session, but we'll leave it there for Chartmaster today. Now, coming up next, Marvell also hit another all-time high on news of a potential partnership with Google amid some rising demand, of course, for memory in data centers. So stick around, we'll dive more into that story when we come back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. It's now time for FOMO as we're discussing Marvell hitting fresh all-time highs today on reports that signaled these ongoing talks with Google to make custom AI silicone. So for more on this, we're joined by Sam Vadas, host of the Morning Trade Live and Market on Close on the Schwab Network. And so Sam, what stuck out to you about this reported partnership? Of course, Marvell trying to get into that TPU space.
Yeah, quite a lot here, Jenny. I mean, certainly when you just look at the diversification that it offers, I mean, vertical integration, what it means for these companies, taking some market share from the likes of Broadcom. You only have to look at that stock to see the reaction today. So there's a lot of moving parts. Let me run you through some of the details of this report from the information. So Marvell and Google are going to be in talks now for 2 new AI chips. They're reportedly designing one to run AI models more efficiently. So one of them is going to be a memory processing unit designed to work with Google's TPU, which of course we know that it's in the business of now. And one of the other chips is going to be a new TPU for running AI models. So the companies are, as far as the timelines are concerned, as per the information, going to finish the design of the memory processing unit as early as next year. So obviously Google, as I mentioned, already has the TPUs, which it owns, and Marvell is best known for its custom silicon. And so this marriage, or these talks, if you will, if they do come to fruition, could mean more specialized chips effectively as far as Google's data centers are concerned. Google's TPU, we know, is already being really seen as an alternative to NVIDIA's GPU. So this could really help the company compete with NVIDIA and continue to do so. As far as the market reaction, I mean, yes, as you mentioned, I mean, an all-time high here for Marvell after hitting a record on Friday. So it continues to climb today. So it looks like it's been a good reaction as far as this stock is concerned. Investors clearly like the report because it could mean more upside for this company, more business from another hyperscaler. For Google, I mean, it's under some pressure today, but we are seeing some steam coming out of the Mag 7, broadly speaking. But if you take a look at Marvell, I mean, it's up like, what, 70% this year or so. Google, in comparison, is up about 7% or so. But if you take a look at the rest of the chip space today, it is broadly under pressure. If you take a look at, as I mentioned, Broadcom, which is down today, that suggests it could potentially be taking some market share here. Broadcom is one of the main partners as far as developing Google's TPUs. That is locked in to 2031. So as far as a risk factor is concerned, maybe not just yet, but this could, there is a view, give Google a little bit more leverage here as far as the fees. That's what some of the reports have been pointing out. So this is really a big deal because I suppose what it does signal, guys, is that the arms race, if you will, is diversifying and is shifting just from a handful of players here.
Yeah, and it certainly seems that way, not only from, let's say, Alphabet's attempt to do this. We've seen other names look to kind of launch some of these partnerships with these companies. But you get that same vibe from portfolio managers that you're speaking to, or analysts, or just general investors when you're having conversation, that there's a feeling that there's too much exposure to the NVIDIAs, the Broadcoms of the world, and looking for those alternatives has been welcomed?
Yeah, I mean, you do. And I think, obviously, as far as the takeaway here and what this really signals, I mean, as you say, as I said earlier as well, I mean, this is becoming sort of a new battleground that seems to be somewhat healthy, moving away from a handful of names. I mean, this is not just one dominant player anymore. It offers that diversification. This is important because that does reduce that dependence on having, one or two suppliers here. As I mentioned also, the vertical integration is no doubt a good thing as well from the perspective of having more control over that supply chain and obviously how you're making and designing your chips as well for your data centers like Google. So Google already has control over the data centers and the cloud. So having that better co-designed type of chip with a partner like Marvell does give them somewhat of a tighter grip on that overall supply chain to perhaps stay competitive. I think that's really the view out there with a story like this. But as far as Marvell is concerned, I mean, just as far as the reaction we've seen in this stock, I think it's important to rewind the clock. I mean, look at that steady climb upwards. I mean, since its earnings, we did actually see this off to the races post its previous report card. And that was because it did have solid earnings, but I think even more importantly, the management gave quite bullish commentary and they also gave that visibility. And I think that was really important as far as just, a clear runway into the future as to, the partnerships and the demand sort of locked in for years to come. And that's really what gave this stock a helping hand. And then obviously since then, into this report today, we have seen a number of analyst upgrades as well. I mean, Barclays, one of the more recent to overweight. It's got a price target here of 150. I mean, we're nearly there at this point. And then BFA also upgrading to buy from neutral, a 110 price target. That was just last month, and we've already blown past that. So, just looking across the analyst consensus here, I mean, you don't have anyone in a sell or underperformed camp. I mean, you've got a couple in the hold camp, but most of these are looking at a buy or a strong buy at this point, guys.
Yeah, and for good reason. I mean, this name continues to really impress. We've risen 185% over the last year or so, and so Marvell continues to be in the right place at the right time as far as assessing what is working right now in broader AI. I mean, again, we're up 73% and some change on the year, so it's been ridiculous. But today, another monster move higher at that, as we're now just 1% off those all-time highs. So appreciate it, Sam Vadas, for all of that breakdown, of course, host for the Schwab Network. As we do think through now trading Marvell, though, Alex, I do think the difficult position is now assessing where we go from here. We do get earnings next month, I believe late next month, so we have some time on that front. But hey, a 5.5% move just goes to show we don't really even need earnings as a catalyst for this name to be propelled to all-time highs.
Well, and the question I have is, I have a running list, and it changes in terms of how long this list is, of kind of the stocks that are sort of often talked about. And I was just realizing we've talked SanDisk today and we've talked Marvell today, and neither one of them have found their way in the list. I think they might be additions that might need to find just how often we talk about these two names. But let's look at an example here. It's a debit spread, and it's also relatively short dated. So it just goes out to the end of next week. This is looking for more upside to continue, but not quite as dramatically as maybe the move that we saw in Aristanet. So this was looking to buy sort of an at-the-money call and then sell an out-of-the-money call, again, about 2 weeks' time. And the real idea here, Jenny, was to structure a trade that had equal risk to equal reward potential, sort of that 50-50 component, one-to-one risk reward, as I often frame it. In this case, $5 wide spread. It's the 145, 150 for May 1st. Looking to spend $2.50. That'd be half the width of the strikes, and it creates that one-to-one risk reward that we were describing. So with this, 147.5 would be the break even. If it's an at the money, you need a little bit of a move higher to get to that break even. And the idea here being, if it continues to drift, maybe you get there by the end of next week. And if that happens, a chance for this to be profitable.
Yeah, and a name that, again, continues to impress even on a month-to-date, year-to-date. Pretty much every time frame you look at it, we are just so well beyond our 50 and 200-day moving averages at these current levels. So up 5.3% here in real time. But that'll do it for us for FOMO today. Now, coming up next, we will dive into what Gen Z workers are really asking for in the broader labor market and why benefits and clarity may matter more than just pay alone.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab as everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers only on Schwab Network.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Next Gen Investing. We know Gen Z is reshaping the workplace from how they talk about pay to how they manage stress, loyalty, and long-term planning. So joining us now for more is Heather Winston, Chief Product Officer within Principal's Retirement Investment Solutions, with some new data on what younger employees are really expecting from their employers. So Heather, thank you so much for joining the show. We know that your data shows Gen Z is nearly twice as likely to discuss pay with their coworkers. So what are employers still missing when they respond to that overall shift?
Well, first, Jenny, thank you for having me. It's wonderful to be here. So when they're talking to their employer and to people in the workplace, a lot of it centers around clarity and, quite frankly, a lack of clarity. So they're looking for pay and career progression and answers to questions about those types of things, which is leading to difficulties that they have in making really big decisions. And unfortunately, when they're talking about pay, they're really also not so comfortable talking about anything personal. So we're finding that they tend to keep personal out of the workplace, and instead they're concerned about pay, but only when they're at work. It's an interesting dynamic for sure.
Heather, I'm sure this somewhat intersects with what you're talking about, but I've spent the last couple years attending a conference with a lot of prospective young men and women coming out of college, looking for work, and you could just see the stress on their face about trying to find the job. And I guess a product of a different era, a different generation, I don't remember feeling the same way. And I also look at how prepared they are and how sort of plugged in and aware of what opportunities are out there. But I couldn't help but ask myself are they just too picky with some of the jobs that they want? And they're looking for that dream job for the first job. Is that also leading to some of these factors that you're talking about?
Well, I think at times, every person is different. And so what they're stressed about may slightly change. But what we found is that among Gen Z, we have the highest reported levels of work stress versus any other generation in the workplace. That comes back to this imbalance between work and the rest of their lives. So while I don't think necessarily that people are looking for the most perfect career, they are looking for a good bit of balance between their personal life, their health, their well-being, their family and romantic relationships, all of those things. And unfortunately, each of those indications along the way that someone goes through, they're negatively impacted by stress at work.
I mean, absolutely. And you have also found that this really path towards more openness increases at least the perceived pay fairness by about 40%. So to get there and to sort of get these practices underway, what would you say is the best first step that those should take?
So I think the first part is really to try to understand the total rewards that your company is providing you, whether that's a company that you're working with today or whether it's a company you're looking to work with in the future. most employers are providing more tailored benefits to varying segments of their employee population. And so as those types of benefits that are available to you expand and change over the course of your lifetime, those are the things you want to make sure you really understand and that you're looking at it as often as you can, not just when benefits come up, but being able to say, I want to take good care of myself and my future family, because it's really about my overall well-being rather than just looking for a traditional raise, for example. And so we have found that even that, being able to just understand the benefit package can provide almost a 15% boost to overall employee well-being, which relative to a traditional raise, that's saying something for sure.
Okay, so Heather, then if we look at it from the employer stance, because I'm sure that this isn't a secret. I mean, we got companies like you who are assessing this data. How quickly, and I know it's not a one-size-fits-all answer, every company moves at its own pace, how quickly are some of these findings and some of these desires from prospective, particularly younger prospective employees, how quickly are some of these companies making these changes and offering packages, perhaps at the expense of maybe lower base salaries or whatever to balance it out, to better fit the needs of these Gen Z employees?
So what we're seeing today is this movement towards expanding the scope of what benefits mean. By the same token, much to your point, it does change, and it depends on the company and how they're structured and all sorts of things like that. But realistically, if they're able to expand, for example, something like caregiving benefits, lots of companies today give people the ability to go out, have comfort in knowing they've got childcare support, something like that. But even if they were to expand that into something that's more globally applicable, like elder care support, can create 20% more loyalty towards that company, even if the employee may not be utilizing those capabilities or benefits today. So it's really kind of an interesting dynamic because we've come a long way in companies, right? But over half of the employee population would say company values are demonstrated through pay and benefits, not through leadership messaging.
Okay, and do you see any degree of concern amongst Gen Z workers that is all things like AI taking their jobs? This job market is very difficult to even just get into because of right now the limited visibility into what AI really looks like.
So I think it's a realistic concern that all employees are facing right now. By the same token, I think AI, for as quickly as it's moving and as comprehensively as it is changing the work environment, there's still a need for people. And the need is to be able to work with AI rather than just supplanting a human being with an AI tool.
Yeah, and I would say that it is definitely something not just, of course, limited to Gen Z. I fully agree. It's something we all feel in our everyday work environment. So appreciate that and really appreciate the conversation today. Heather Winston, Chief Product Officer within Principles Retirement Investment Solutions. So now coming up next, USA Rare Earth shares are jumping following a major acquisition in Brazil. This comes as China's grip on rare earths is suddenly back in focus. So for more on what this move means, when Next Gen returns.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. all with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30, and today we are focused on USA Rare Earth, jumping after announcing a $2.8 billion deal that could reshape the global rare earth supply chain from mining to magnets. So joining us for more on this is George Tillis, Senior Markets Correspondent for the network. And so George, walk us through this news today. I will say we've pared back from a over 10% jump today. Hey, still up though 8.4% in USA Rare Earth.
Yeah, this is actually quite an accretive deal for U.S. Rare Earth Incorporated, which essentially is an Oklahoma-based company, but they have a claim on what's called the Round Top Mountain deposit in Texas. And one of the things about this deposit is it's been stranded. In other words, they haven't monetized it yet. They were expecting to fully bring it to a market or operations in 2030. So what the company has done strategically here is actually made an acquisition of Sierra Verde Group, which is a Brazilian rare earth mining company, for about $2.8 billion, 300 million of which is cash. So they had about 360 million in cash on the balance sheet. So this essentially brings revenue right to the balance sheet or the income statement for the business, considering that last year, based on some deals that they had, about 1.6 million in sales. Estimated 45 million this year, and next year looks like $285 million in sales are anticipated for the combined businesses. So this essentially is an accretive deal to bring in more revenue, and of course encompass rare earth metals based in South America, as well as, like I said, full anticipation of operations in the Texas area going forward by 2030. It seems to be that the administration is very keen on making sure the United States becomes fully eligible and capable of producing rare earth magnets and metals, considering China really has a stronghold market share globally.
George, given that relationship and pretty serious, it seems, investment from maybe the most liquid source of capital on earth, which is the U.S. government, does that change the dynamics when you're assessing a company like this? Because financially, I mean, we're kind of pre-revenue still, right? We're more in the talking about what it could be stage, and that's super uncertain usually.
Yeah, so there's a few things going on. First off, yeah, you're right. This is a company that really hadn't generated much revenue at all. Total expenses last year were over $320 million. So part of what's going on is financing. The company did receive about $1.6 billion in very favorable financing as part of the CHIPS Act that went on last year. So with that said, they're using that money to expand their operations going forward, like I said, to fully operate in 2030. Now what they're also doing based on these deals in terms of debt financing is they've been issuing shares. And so what the share issuance is, they're making strategic acquisitions to basically bolt on revenues today. And that's what they've done with this acquisition. So this is a tactical move to expand operations globally, but also to bring in revenue, which again makes more sense considering the assets that are stranded in Texas right now, which aren't fully operational. So it looks like this is sort of a win-win because now there's a lot more visibility. And if you also look at the deal itself at around $2.8 billion, next year's anticipated sales around $285 million. So the deal was about 10 times next year's sales, which again may not necessarily be too expensive. So it looks like it was a tactical move to bolt on additional revenues as they continue to ramp up production here in the United States.
Yeah, and I think that's a good point there. And again, a name that's continuing to see this volatility. And today is no exception as we're up nearly 9% on the session. But so appreciate that, George Chillis, for all of that breakdown as we, of course, do close out the show today. That will do it for Alex and myself. For Next Gen Investing for this Monday, we have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange, and we have a big show for you today. We're watching Apple, which is up more than 7% this month, with services continuing to be a main revenue driver. We'll take a closer look at Apple ahead of the earnings in our tech spotlight. The U.S.-Iran ceasefire, well, it expires this week, and our panel is all about oil, energy. We are due to have some peace talks. Will Iran show up? Tom White is standing by for big moves and options trades and looking at today's session. And Nike, PepsiCo, Taiwan Semi. Here's a look at the markets. We've had some back and forth action already here on Wall Street after the records we saw last week for the NASDAQ, the S&P, the Russell, and the Dow Jones Transportation Average. Today, we're seeing some back and forth action. Right now, the S&P is down 24 points, 7101. The NASDAQ is down 119 points at 26,553. The Dow Jones Industrial Average is down 95 points at 49,351. Here's a look at our heat map so you could check out the story, right? You can easily see that energy and financials have some up arrows while the Mag 7 are mixed here. On the downside, real estate and utilities, those are some weak areas. And the plus side includes energy, materials, financials. Those are the plus side. And on the downside, the biggest losers, communication services and consumer discretionary. Here's a look at the rest of the futures board for you. The oil and gold trade. Gold is down almost $50 at $48.29 a troy ounce. And oil has been the main story today as it's surging 5.8%. Last week, oil dropped 12%. This week, back up again, and that is all about the uncertainty pertaining to Iran. Will these peace talks really go through? The ceasefire? This, as the U.S. Navy did capture an Iran cargo ship. And also Israel fires back on Lebanon. And Israel and Lebanon are due to speak in Washington together for a second round of talks later this week. So there is a lot happening, folks. Got to stay nimble. 2 hours left in the trading day, and we have a lot to watch here. So as we look at our market moves, joining me for that is Diane King Hall, because closing bell is just a couple hours away, and what will happen between now and the end of the day. Now, of course, tech often runs this market one way or another. I mean, they're trying to just put their blinders on when it comes to oil and such. I mean, you have big news when it comes to Google and Marvell.
That's right. So Marvell catching a big bid today. Investors are piling into this one, adding to the advance. It hit an all-time high earlier today. It's off of that, but still strong gain at the moment. That those shares of Marvell higher right now by about 6.25% at the moment. This comes after a report in the information that Google is in talks with the chip maker on 2 new AI-focused semiconductors. Now, the report says one would be a memory processing unit designed to work alongside Google's tensor processing units, TPUs, helping move data faster during these AI workloads. This is all about not just the proliferation of AI, but diversifying from the view clearly of Alphabet Google. So the companies are also discussing a next generation TPU. Now, Marvell is up almost 200% year over year. In April alone, that stock is up about 50%, give or take here. So it's had some momentum, and the wind is at its back right now, especially with this news. What's interesting about the effects, the knock-on effects here, you're seeing Broadcom shares take a step back. The reason is we know that Alphabet, Google, and Broadcom have been working together, right? And so the report signaling that Google may be looking to diversify away from Broadcom, right, amid this ongoing demand for chips, right? And who else? What are the other alternatives, especially when you think about the cost of, for instance, NVIDIA's chips, right? So there's another player at the table here beyond Broadcom. And Marvell, as a result, seeing those shares rally big as Alphabet, Google, and others, when you think about the hyperscalers, look to diversify their dependence on just one player, Nicole.
Yeah, and you know, we were doing, thank you for that. I was speaking to our social media team. We were doing Inside AI, and we talked a lot about Google today, and also the Google Cloud Next conference, which begins this week, goes through mid-July, and they talked about next-gen TPUs that will speed up inference. Also, the work that they do with Anthropic and Meta, those companies will be turning to Google for hardware. And last but not least, that Citi had a 90-day catalyst watch for the upside for Alphabet Google. So I thought that was interesting as well. Google's down, of course, today, down just over 1%, and Marvell at the new highs, like you noted. Let's take a look also at Intel, because this has been an incredible performer.
It has been for Intel. Shares taking a step back today, but to be fair, it's had a strong run, and we have some weakness in the market today as on the macro front when we think about the geopolitical risk and the tensions in the Middle East, right? But Wall Street is getting a little more constructive on Intel ahead of earnings, which come this week. Cantor Fitzgerald and Stifel both raising their price target on Intel, but they're raising it to just 65, which is around where it sits now, because they're kind of cautious given how far Intel has run. Where they are constructive, though, is they do see better pricing power as it relates to Intel. Cantor says even if PC shipments slow in 2026, Intel could still grow revenue because pricing is improving there, especially in server CPUs, where enterprise demand can certainly support stronger margins here when it comes to Intel. They like the supply chain story there. They see improvement there. They say supply conditions are getting better through the year. That can help Intel deliver more chips here and improve execution overall. Manufacturing process, Stifel highlighting that 18A manufacturing process that we often talk about with regard to Intel. They like that, the next generation chip making technology. We know that is central to Intel's comeback plan here. And then overall, of course, there's the leadership reset with Lip-Bu Tan. They like that, but what's still holding them back from being more than just neutral here and seeing shares essentially where they are? One, given the valuation after a strong run, the stock sitting still near 52-week highs. It's already up sharply year to date. They feel maybe the turnaround optimism is already priced in, but April 23rd matters. It's the earnings date, Nicole.
And really, can Intel compete in the new realm? Not just looking at PC demand and such, and the run-up that it's had. And most of the targets that I see are at near or lower than where we are here today. It's been an incredible run, and I know they had a lot of PR headlines that hit them pretty hard. I mean, this was an $18 stock about a year ago, and now it's right near the highs. It's at $65, and the high was 70. So it has been an incredible run. 1 year up 240%. How about we talk about AST SpaceMobile? We talked about that earlier today. Big news.
Yeah, indeed. That stock is under some pressure today after the setback for the satellite here. You had that weekend launch, and there was an issue with the weekend launch where, with regard to one of its satellites, that satellite went into space aboard the Blue Origin New Glenn rocket, but the rocket placed the satellite in a lower orbit than was planned. So it was too low for the satellite to operate properly. AST has said that the satellite will be deorbited. It will essentially fall back to the Earth's atmosphere. It'll burn up. The satellite is effectively a loss here. Now, AST has said it expects to recover the cost through insurance. So it's saying this is insured. We can cover this. That should help soften the blow. That's not enough for investors. The stock is still down today, down about just shy of 7% right now. AST SpaceMobile says they're still sticking with their plan to launch satellites every 1 to 2 months this year. So their goal is still, more than 3 dozen satellites in orbit by year end. 45 to be precise is the number they're looking for. But again, there's some competition risk here. In terms of the analyst views on this, it doesn't mean they're deconstructive on this, but they said, look, this is a setback that AST SpaceMobile did not need. Nicole?
Yeah, and what I saw earlier was all about Blue Origin and how, they were blaming Jeff Bezos' Blue Origin that didn't put them in the right position to have that ending in the right place. So we'll see. They are blaming Bezos' Blue Origin. I think that's really interesting. So the stock is down 6.9%. Okay, we'll have to see what happens after this. If Jeff Bezos comes with a sort of a rebuttal.
Yeah.
All right, Diane King Hall covering everything here. Thank you, Diane. Okay, coming up, we're going to spotlight tech and Apple and all the earnings that are due out. We have a busy week of earnings ahead, and what could it be for the next stock to watch, including Apple, right? Big moves. Tom Moy will join us. He'll have real options trades for Nike, PepsiCo, and also Taiwan Semi. So much more when the watch list returns. Right now, the Dow's down 66, the S&P's down 21. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our Investing Webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. All right, welcome back. We're here on the watch list. We're watching Okta as it's trading higher in today's session after Barclays upgrading the stock to an overweight with a $90 price target. It's at 76 today. The firm's CIO survey indicated that identity has moved to a top security spending priority, and Barclays believes Okta has broad exposure to the larger identity market. The stock is up more than 20% just since April 10th. Here's a look at some of the cybersecurity names and how they are faring today. And you are seeing up arrows across the board. So tech is holding on today, even though we've had some back and forth action. Oil's down. Tech has been a bit immune, at least in part. CrowdStrike's up 1%, Palo Alto and Fortinet as well, all gaining more than 1% each. Now it's time for our Tech Spotlight. We go deeper into Tech Spotlight and take a closer look at Apple. And joining me right now, Christopher Suk is with us, Chairman and CIO at CAZ Investments. Do I say Kaz or it's Kaz?
Kaz.
Isn't it, Kaz?
Indeed.
So it's great to see you. I'm glad you're back here in person at the New York Stock Exchange. So tell me a little bit about how you've been feeling about tech. I really want to dive into Apple, but it's amazing to see the tech resiliency with the NASDAQ up 13 days in a row. We hadn't seen that since 1992. That was a good, nice run for tech.
No, it was a very good run for tech then. It's been a great run so far. You know, we had all of this kind of pent-up fear on the Sassageddon, and everybody was kind of like selling everything related to technology. And now that we've seen some of that pressure alleviate and hopefully getting some resolution in the Middle East, it just people went back to what they're most comfortable with, which certainly has been technology.
Yeah, I mean, we were talking about all the, sorry, I didn't mean to interrupt you, but so many, every different day, there's a different deal. Today, it's Google and Marvell. You know, literally every day, there's another deal that we talk about on the daily. I do an AI, Inside AI topic on schwabnetworks.com every day, and there's always something to talk about. It's incredible, whether it's Google or Anthropic or OpenAI or whatever. Is this going to drive GDP? Is this what it's about, the AI revolution?
I mean, it's going to drive GDP. I think it's going to also help companies get massively more efficient. At the same time, I think you're going to see this, you know, counterbalance, which is it is going to impact hiring. Now, we haven't seen mass layoffs yet, but those potentially could be coming. But what we do know for sure is that there's a lot less hiring going on in areas that are being replaced, or at least people are thinking might be replaced by AI. I mean, for those that are graduating from college right now, it's a very tough market for them to be able to find a job. Back to the M&A activity is, you know, these companies generate so much cash and generally speaking don't have a lot of debt. So they are absolutely willing to buy growth, and they'll do that through the M&A market. And we are seeing almost a deal every day.
Yeah, I mean, it is, as you said, and a lot of cyclical spending that we're seeing. I mean, when you look at the Mag 7, for example, and I know some targets were taken down or some negative comments on Amazon, Apple, Meta, and Tesla today that all had something, you know, maybe a little negative on the downgrade side. Could have just been a couple of bucks or a valuation call or something like that. But I mean, when you think about those Mag 7 names, do you like some more than others?
We're really not that excited about the Mag 7 in general. Some of them are certainly better than others. They've all run so much here in the last just literally couple of weeks after pulling back quite a bit. So certainly where they were 2-3 weeks ago, Nvidia down 20 bucks from where it is right now, you know, Microsoft down quite a bit during the Sassageddon. Those were prices that we were much more comfortable with. But today, we're really not that excited. But what I personally love is how so many of the things we're doing in the private markets are actually now being bought by a lot of these big public technology names.
And you mentioned NVIDIA, a lot of excitement about NVIDIA because it hit 200
today. I mean, that's sort of a big deal, right? It's back to the 200 level. I hadn't seen that in some time. Let's talk about Apple. You've talked about the great run that Apple has. I know in the fall we were supposed to hear more from Apple. I don't know about the foldable phone, but the 17 has done very well for Apple.
Apple's been doing a good job of continuing to get better, but they haven't done anything revolutionary. I mean, when we look at Apple, they are a phenomenal business throwing off enormous amounts of cash flow. But at the same time, they're not accelerating growth. They're having to effectively outsource their AI initiatives. So the partnership with Google, as an example. They tried to fix it internally and fix Siri. I like Siri, but generally speaking, Siri is not anywhere near where Siri should be. But in this particular situation, they had to go to Google in order to be able to get that capability set. So we love Apple as a business. I love their products. At the same time, the stock is the most expensive it's been in many, many, many years. It's almost 32 times next year's earnings. And when you have a stock that's that expensive and not really growing at a very fast rate, it means that there's a lot of risk on the downside. So great company, not a great stock right now.
Not a great stock. You know, as we take a look at Apple, I mean, you mentioned about Google, paying Google $1 billion a year to license Gemini. And a lot of folks thought that maybe Apple was being, you know, sort of forgotten because they have agentic AI coming in, that it could really be a catalyst or proponent to moving Apple higher rather than it not being a stock that you want to own. What do you tell those folks?
Well, I think that there's a lot of potential value in what they're doing with Google, but at the same time, they're beholden to Google's capability set. And while Google's obviously a fantastic company and will do really well with Gemini, will they really be able to do as much for Apple as Apple might have been able to do for themselves if they were willing to invest that capital in their own business? And it's always hard because you can buy the capability set, get it today, as opposed to build it, which might take quite some time. But what I'm not convinced of is that it's going to really accelerate the earnings growth of Apple, because of the fact that, are people going to spend an extra $1,000 for an iPhone on top of what they're already spending? Maybe. Maybe not. I don't know. That becomes really hard to predict. And I don't like investing in things that I cannot predict with high accuracy. So you give me a 30% decline on the stock price, I'm going to like the stock a lot more than I like today.
Yeah, understood. I mean, we think about Kevin Warsh coming in and his sort of, you know, proponent to why he should cut rates or not. He's got to try to please the president. I think he'll try at least. But nobody knows what he may or may not do and how his moves could affect tech.
I mean, I think Warsh is going to do what he should do, which is let the data drive his decision. It should not be political. Regardless of who is in the White House, they should not control monetary policy.
Right.
So without question, the economy is weakening. There is definitely going to be a strain on the consumer that's going to continue. And oil prices, while they may come down, assuming we get some peace in the Middle East, they're going to come down some. They're not going to come down dramatically, which that's going to have an impact on the consumer. And when you add they're already stressed, they're already having a tough time making payments. 1 out of every 6 subprime borrowers and auto loans are delinquent on their loan payments right now. So that could lead you to potentially seeing a cut. That usually is very good for technology and certainly could be good for Apple if all boats begin to rise.
Do you have a favorite tech stock?
One of the ones that's about to come public is one of my favorites, called Cerebras.
Oh, yeah.
That's going to be a big IPO. We love that company. We own it in the private market, full disclosure, as well as SpaceX, obviously. That's all over the news. So both of those are great. Cerebras is one to watch.
Yeah, we talked about that as well. Thank you so much, Christopher Zook, Chairman and CIO at Kaz Investments. Christopher, thank you.
Thank you for
Glad
having
you were here. Coming up, let's dive into the latest on Bitcoin and crypto and all the trends that you need to watch. So Bitcoin is up more than 25% off the February lows. What's next for crypto? Okay, coming up, also the jump in oil prices, a closer look at that, what it means for the energy sector in your portfolio. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Welcome back here to the watch list. American Airlines. Those shares are moving lower today after the company rejected any interest from United Airlines about a potential takeover. The stock popped 4% on news of the United floating the possibility of the merger, but the company released a statement saying it's not interested in any merger discussions at all. You know, it's not good for competition. It's not good for the customer, they said. In the meantime, airline stocks, as you can imagine, as oil is higher, we're seeing airline stocks lower. American's down over 4%, but Southwest down 1.7%, United down 2.4%, Delta down fractionally today. Let's move over to crypto here, taking a closer look at Bitcoin, Ethereum, the crypto report. Here we go, because we welcome Ray Salmon, head of markets at Cointelegraph. I'm so glad you're with us, because we think about the peace deal. If the deal happens or doesn't happen, how does it affect crypto? We've seen Bitcoin doing okay and being quite resilient, no?
Yeah, to be honest with you, Nicole, I think the peace deal is somewhat irrelevant. And I know that that's a huge statement to make, but many Bitcoin investors believe that, resulting from the way that this economy is being managed, that if economic stress leads to easier monetary policy or rate cuts, such decisions have been historically positive for Bitcoin. So Bitcoin has shown strength since the Iran war started. Bitcoin has shown strength since the market started reacting to the reality that inflation may rise. Bitcoin has risen since Kevin Warsh was nominated as the next potential Fed chair, and Bitcoin appears to respond well to the concept of multilateralism breaking down and individual financial self-sovereignty and the sovereignty and borders of nations being challenged through a weaponized dollar, through military incursions, and through whipsaw tariff policies. So to be honest with you, I expect Bitcoin to continue showing strength in this environment. And if the Clarity Act becomes law, then I think you would see Bitcoin, Ethereum, DeFi, stablecoins, and more take off. So yes, while Bitcoin does trade somewhat in tandem with equity markets, it has kind of gone asymmetrical in its price action and its sentiment since this whole Iran war started. It's been a benefit to Bitcoin, which is
just BTC.
Peculiar, is it not?
We've started, I mean, it's pretty amazing to see the Bitcoin run we've had, right? Just this month alone, up over 11%. We had the Genius Act, the Clarity Act now. Once we get something with some more vision, I know 75,000 is sort of this area that can be sticky for Bitcoin. I mean, what does it take to get to 100,000 sooner than later?
You have a variety of narrative catalysts that are starting to coalesce and converge, and it's that sort of narrative catalyst, along with capital flows, that gives investors the confidence they need to open new Bitcoin positions in the spot market,
75.
and also in the perpetual futures and markets where people are opening leverage. So
eBay,
aside from that, I think if you
Google,
look at capital flows
Nvidia.
into the ETFs and new product launches from a variety of traditional finance entities, you can see that there's a bid on Bitcoin, and that's why
BTC
it's
is
never really fell below
76.
60,000 or to any of those incredibly low prices that analysts have had, and it's found pretty good support around 70,000, and
It's
just
up
a few
to
days ago
it's
it
up
tested 78,000. So getting through that
3.24%.
$80,000 barrier, I expect to remain a challenge in the short term. I think really in the short term, the kind of missing puzzle piece here is whether or not the Clarity Act goes through markup, and do we get signals from Capitol Hill that it's going to pass in the Senate, make its way to the president's desk where he's already committed to signing it.
You know, last week on Friday, I had a guest who actually said Bitcoin to $1 million. Does that seem out of
God,
sight?
I wish.
I mean, is that something that could really happen, let's say, in the next decade?
There's a lot of models that suggest that, so I am not the person to say no. I think the best way of positioning for that price point, if an investor thinks that Bitcoin could go to $1 million, is to dollar cost average and to not put in more than you could lose. But there's a lot of different models with timelines on when the price will get to 100,000, 400,000, 800,000, or even $1 million. So I don't put it beyond reason. I mean, I didn't really even expect 100,000 to happen within my lifetime, and it happened, right? So as peculiar of an answer as it is, I think yes, it is possible.
Yeah, and you noted all the institutional investors from Morgan Stanley to Strategy, Bitcoin Income, Goldman's Bitcoin Income ETF, BitMine, just to name a few. Ray Salmon, thank you. Head of Markets, great to see you. Cointelegraph.
Cool. That means I'll be rich in a million years. Anyways, all right. I'm gonna go ahead and raid out to. Let's see. Yeah. One viewer. My ad is about to start. Okay. We'll wait for the ad to go. Ad break is starting soon. Then we'll come back from the ad break and look at some stocks, and then we'll raid over to Erin. Let's see something here real quick. Create a fundraiser. Step 1, Hearts and Homes for Veterans is a 501c3 that helps veterans get into housing. Our mission is to end homelessness among veterans. Our goal is to lift veterans out of poverty. We furnish them with things our veterans need, set up the household. We provide pots and pans, dishes, household goods, including furniture. We try to give them and their families the necessities to give them a good start. Let's go with $1,000. And review your goal. To amount. Yep. Save the fundraiser. And let's we will start the fundraiser. Your channel is switching to fundraiser mode. You will now have a donate button on your channel page. You can always increase your goal. You can stop your fundraiser at any time. Once the donation has been made for the fundraiser cannot be permanently deleted. Okay. By starting a fundraiser, your data will be received and okay. Start. Back to Stream Manager. Alexa, remind me next Monday the fundraiser is running.
Just a second. What time would you like to be reminded about the fundraiser next Monday?
9 a.m. (9 a.m.)
I'll remind you next Monday at 9 a.m.
Okay. Well, check it out then. Thank you. That's all. Alexa, home screen. All right. Good times. The ad is finished now. Now we'll rate out. I just set up the fundraiser, so let's get to the giveaway real quick. I don't think anybody entered, so they did not. What am I sharing here? Wheel, t-shirt, clock, simple, follow, Discord, Tangia, VOC. Hello. What are you doing? You talking to me? Yeah. All right. No entries into the t-shirt. So no t-shirt giveaway today. So maybe tomorrow. Also, we are now running the fundraiser. So for homeless veterans. Anyways, we're out today. That's it for today. See you tomorrow. We're going to raid out to Aaron. Boom. Hello. What are you doing, Sam? We will start the raid. Raiding now.
What do I want to do?
You guys, oh my god, it's a raid! Sugar!
It's the Sugar Skull Show. Hello. How are you doing and how was your stream? What were you streaming today?
Come on! Sugar Skull Show, here we go. Music, tech, and much to flow. Come on, dance, let it show. Energy high, feel the glow. Lights flash, beat gotta catch. Groove to the sound, make it last. Tech magic all around. Feel the vibe, feel the sound. Step by step, we won't stop. Feel the beat, make it pop. Tech in tune, so alive. Sugar skulls, keep the drive. Join the ride, music loud. Tech in tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Tech in tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Come on. Come on. Come on, shout it out now. This is Sugar Skull Show. We got lots of music, technology, and more. Come on! Come on! Sugar Skull Show, here we go. Music, tech, and much to flow. Come on, dance, let it show. Energy high, feel the glow. Lights flash, beat gotta catch. Prove to the sound, make it last. Tech magic all around. Feel the vibe, feel the sound. Join the ride, music loud. Tech and tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Gadgets, gadgets, lights so bright. Rhythm takes us through the night. Feel the pulse of the scene. Sugar skulls, living a dream. Come on! Step by step, we won't stop. Feel the beat, make it pop. Take it to so alive. Sugar skulls, keep the drive. Join the ride, music loud. Tech and tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Tech and tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Take it tune, so alive. Sugar skulls, keep the drive. Join the